Well, last time I have asked you asked some questions on the cryptocurrencies and left there, um, and most of those questions I will leave unanswered. Although, when you want to consider overall the cryptocurrencies and their role in the global finance, you might basically think that cryptocurrencies are making the global interactions easier because it is a type of currency that might have value everywhere, which actually uh, everywhere is not that much necessarily true, because everywhere would mean not only every country but also every different place you want to buy something. And as I said, not only something small like when you go to a kind of alternative coffee shop, which is gathering place of different people with different ideologies, where you might make your payments with cryptocurrencies, or some shops, some restaurants, maybe small restaurants or even large restaurants, I don't know, but rather even big places with that accept big payments. For example, buying a house with cryptocurrency, um, or buying, I don't know, paying your tuition to the university with cryptocurrency. Those are big leaps, big things. I mean, that which will show you cryptocurrency is not just a small scale thing, but it is actually getting bigger. Um, Even if these things become possible in some areas of the world, basically, that would mean that. Uh, right now, it is kind of an experiment done by, uh, as far as I know, not for-profit organization, but rather an idealistic organization. But still, even if you start as an idealistic organization, I mean, managing the whole world's or significant a monetary system which has a significant effects gives you a power. Even at current level, it gives you a power. And will this power not be used for profit? And basically, I mean, will this power be left to one person, however idealistic it is? And if that person dies, and another, who will replace that person? Should we not care? I mean, should we just be sure that another idealistic person will replace it, or should it be somehow should this monetary system be run by a collective, let's say, the uh, collectively elected officials? Of course, you might say that as an independent organization, if cryptocurrency as a monetary system will fail because the people running it are uh, benefit from it, it might be possible to switch to a new monetary system. We might punish them, and we might uh, have a new monetary system. By the way, we can also change the officials at the head of the monetary system. But I mean, those individuals that are doing their jobs with self-interest, it's possible to argue they might do their manage monetary system better than the even appointed officials who don't have that kind of an interest. And that can be a discussion. That can be a discussion. Um, uh, but and in a very small scale, management of cryptocurrencies is still, we will see. We will see. I mean, um, as for now, it could not create a well. Its scale has remained relatively small. It will spread up, and if it spreads up also, I mean, is it possible to have a global currency system with cryptocurrencies? And if something that if that monetary system managed poorly, then will it be that easy to have a simply a new monetary system emerging, basically? Those are big questions. Those are big questions. Um, and there were alternatives of the cryptocurrencies, and many of them actually make many people bankrupt. I mean, in process, I mean, people realize they are bad alternatives, but people were harmed from it, at least the ones. I mean, although many people who actually were buying cryptocurrencies were initially at least not buying because they think it's a good money to exchange, but rather they think the monetary value of the cryptocurrencies are going to rise. So they just invest in cryptocurrencies. They were not considering it as actual money they use to buy things. So cryptocurrency is a big discussion. Um, I have mentioned the basic problems of it, and you can make further research on its details if you are interested in. I'm leaving that discussion here. Now I will look to certain data. So these are foreign reserves, although it is more than the central bank, I believe. I mean, it also adds other institutions' reserves. And if you look, one of the important developments in 2000s is after the crisis in 1990s, which forced them to become fiscally more conservative and unable to actually maintain their international balances. I mean, failed to get enough dollars in their central banks. Developing countries increasingly start to basically get dollar into their reserves. Um, you can also see the increase here, which is mainly created by them developing countries. You can see here China, which started from all the way from 0.17 trillion dollar, 170 billion dollar to 303 trillion 840 dollar, which in 2017 has fallen down. So it kind of used this reserves to some extent to stabilize the economy after 2014, and you can look to the number what happened after the 2017 also. I'm leaving it to you. So this is one important fact of the current world. I mean, this foreign exchange reserves. I mean, especially for developing countries, they see those reserves as a way to have at least short-term independence in terms of monetary policy, because when they are not that independent, they think their experience might be not so pleasant. And in a minute, I'm coming to that unpleasant experience also. We have already talked on this exchange rate dilemma for the countries. I mean, exchange rate basically is integrated the countries' economies to the world economy and make the economic interactions easier. But now, basically, the basically you cannot use your monetary system anymore for the stability of the national economy. It's impossible. It won't be possible unless you restrict capital mobility. So there is a trade-off, as we have talked before also, between the stability of the national economy, stability of the financial system, with which I mentioned, I mean, especially the exchange rate stability, basically, and the capital mobility and global integration. This is especially these constraint is especially true for the countries that are not United States. I mean, all countries except the United States. United States is a different kind of challenge we have talked basically. And then we have two institutions that were supposed to help to the countries that were experiencing problems with their monetary system. One of them was the actually monetary system, that's IMF, International Monetary Fund. World Bank is actually a kind of bank that was responsible for the fiscal policies. I mean, when you cannot meet, for example, you need to have some government spending done to stabilize the economic system, or improve your economic system. World Bank is there. I mean, they might also help, for example, for certain type of investments to investments countries do. So different type of fiscal policies governments are doing, spending to stabilize the economy, stimuluses they give. They are also done by the World Bank. Of course, when those policies are approved by the head of the World Bank. IMF is more like the central bank of the world, which whenever countries have difficulties with stabilizing their currencies, values, IMF helps. So in that sense, I mean, you might not need to have this large dollar reserves because when you are in trouble, I mean, when your company has trouble, it's always good to have a bank from which you can get money. Hopefully, I mean, that trouble is a short-run trouble, and you will basically be able to pay back to the bank. In some cases, I mean, you might need support for a relatively longer time, but you hope, and if economy is stable, many small companies do in the end overcome those difficulties and pay back to the bank. So IMF has similar function for the countries. I mean, countries, whenever they run in trouble, they go to IMF. IMF is providing them for short-term funds to get over their problems, and even if that time is elongated, hopefully they will get over those problems. But if you are living in 1990s, I mean, even as a high school child as me, you might have very well heard IMF as the one big imperialist organization. Why? Why was IMF accused of that? And we will come back to these institutions also when we talk on the global institutions. But so in a way, I mean, all our presentations have some intersection points, which is logical. I mean, different segments of the world economy have intersections with each other. So here is the thing. From the perspective of IMF, in 1990s, this has happened. They argued that many countries they have increased the debt they got from the as a government, and they spent that debt for the social programs and stimulating their economy. But in the end, they don't create an economy which will grow and basically at the very end will be able to pay back that debt. Rather, that economy become dependent to the debt that is gathered. So, according to IMF, this was unsustainable. So when those countries, multiple countries, including Turkey, go to IMF and want the funds to stabilize their economy, they say, okay, now we are at a point where our economy is in trouble. We are not able to fix our currency. You are an institution to help the countries in this case, so help us. IMF said, no, I won't help you unless you reform your economy, because unless you reform the economy, you will come to me again and again and again and again. So you need first fix the economy, and then I will come and give you funds, loan funds, basically. They don't give the money freely, they just give loans in return of those reforms. So IMF dictated different policies which were called IMF structural adjustment policies. One of those policies, which is recently challenged in Turkey, making central banks independent. I mean, the head of the central bank could stay there and may give independent decisions from the political parties. I mean, political parties could not dictate the decisions to the central bank. So that central bank can be run by technocrats who operate central bank according to economic principles, of course, economic principles that are seen accrued by IMF. So you should aim, monetary policies should aim monetary stability, which means stability of the exchange rate. You should reduce size of state and increase capital mobility. I will talk more on this in next